All right, guys. We have Matt from Moves Financial. Is it the CEO? CFO?
CEO, yeah.
CEO, man.
I mean, it sounds more elegant than it actually is. I mean,
yeah.
It's the guy with all the hats.
Yeah, exactly. The CEO who wears baseball hats on a normal day. But
hang on 1 second. Somehow my Alexa just started playing rock music. Ziggy, stop. How did it get that? I call her that with the Z because it's. How did she even pick that up? Anyways.
No, the reason why I said that, Matt, is because my business partner and the CEO, by the way, he calls himself the bulldozer. His job is everybody else's job to make sure everybody can do their job, right? So there's days you just wear every hat.
Yeah, no, I like the metaphor, but I also get made fun of on my team because I'm not wearing one today, but like 90% of days I have a variety of a hat on my head. So it's both like literally true and metaphorically true. So
Jason, we need to get him a hat with our logo on it. So you can
I love it. I always wear hats. If I have my hair combed, someone died or I'm going to a wedding. So
I have the same different color, but I have the same rideshare guy hat as you. And I have the Gig Economy podcast shirt actually worn today, but
Yeah, Harry sent that out for me. I really appreciated him doing that. I like Harry. So, Matt, it's been 6-8 months since we talked. We've done sponsorships. This is our second run with Moves, and we can't thank you guys enough for supporting us, and we love talking about you. So why don't you just give the 60-second, if people have not heard of Moves, kind of what Moves is, and then we'll kind of dive into some different topics.
Yeah, I mean, I think we're getting a lot crisper in our ability to explain like what it is and what it isn't. Effectively, what we're building right now is a bank account for gig workers in which they can get access to cash advances and in which they can earn rewards paid in stock of the companies that they work for. So, and we can talk more about what that means and how it works, but we're effectively trying to be like a suitable solution for all of your like earnings and spending, regardless of what gig apps you're working for or how many gig apps you're working for. And I guess like the two sort of like unique features of our account that you wouldn't find in most other accounts is the fact that we can give you access to up to $1,000 cash advance sort of out of your earning schedule. And we pay you back in this concept of stock reward. So you're actually earning shares in Uber, earning shares in Lyft just by using the account.
That's incredible. So early on in our run with each other, I had thought you had to buy that stock, but that's not correct, right? You're earning it as you earn on the apps as you're working.
Yeah, we're funding it effectively. Like, in some products you see programs like cashback programs, or you see sort of like bonuses associated to doing things like referring a friend or whatever. In our mechanism, we use stock to do that incentive as opposed to using cash to do that incentive. Ultimately, if the user wants to turn around and sell the stock that we give them, that's really easy within the app, and it would just get added to their account balance as like a cash balance that they could spend. But we're trying to test this sort of longer term idea that if we give stock to gig workers, we can change sort of the way that they're perceived and viewed within the gig economy. So, but we're taking revenue off of the business to fund that stock. It's never dollars coming out of the gig worker.
How many, and you can give me a rough estimate, how much have you, I mean, it's kind of like a reward. How much stock have you rewarded the drivers out there? If you know that, I'm just curious.
I don't actually know the number, but I'll say until next month, it's been a private sort of invite only feature. We were testing it. So it hasn't rolled out to our entire user base, but like, to give you a sense of like the scale, if you do things like refer a friend, we're testing numbers between $20 and $30. If you complete what we call like a task in the app, and those tasks are typically tied to like, hey, earn more than $400 this week, and we'll give you a $5 bonus in stock. So generally the amounts are somewhere between $5 and $50 that we're rewarding back to users. And then there's other places that we might test it. Like we're talking about, in the context of our cash advance, if you repay your cash advance early, we might actually give you the fee back in stock so that it sort of gives you an incentive to pay back. So there's all different ways that we're thinking about using it. But ultimately, I think, a user that's using our account on a regular basis could probably see themselves earning, $10 to $20 in a month in stock. So it's not, nothing that's going to make you rich, but it's something that we hope sort of signals that we care about you joining our product.
So all those, sorry, Jesper, one more question. I'll let you jump in. All those things, those perks that you talked about, is that for everyone or is that still only in beta?
It's
or
only
invite only. Sorry,
it's invite only. Although it's become a lot easier. Like it used to be that we were designating who we would invite. Now, if you request to be invited, you're effectively automatically invited. There's sort of like a request to join button in the app. And that sort of kickstarts the process of opening a brokerage account for you, because to be able to give you stock, we actually need to open a brokerage account to put the stock into it.
Right.
But that went from being only Uber stock, 6 months ago when we first started, to more recently, about 2 months ago, rolling it out to 6 different stocks. So we're now supporting Uber, Lyft, Amazon, DoorDash, Grubhub, and Target for shipped couriers. So depending on what app you're like most commonly using, we'll try to reward you in the stock of that company effectively.
So you don't get to choose what you want yourself. You just get something assigned.
Right now, that's the way we do it. We sort of designate, we identify like what's the app that you're most commonly earning on, and then we give you that stock. There is a view to probably making that more of an option to the user. But the simplest way to do it right now is if your primary app is Amazon Flex, we're going to give you Amazon stock. If your primary app is Uber, we're going to give you Uber stock.
Right.
Yeah. And like the other sort of tricky thing about it is that we only have 6 stock that are publicly traded, but we actually support 21 of these apps. So the 15 other apps that don't have publicly traded stock, if you're on Curry or you're, Roadie or GoPuff or Instacart, we're still offering you stock rewards, but we can't offer it to you in that company because they're not public. So
sure. But I mean, that's self-explanatory, right? I mean, so you're still kind of getting back. One thing that I mentioned, as we were kind of talking a little bit before the show, was that I think I want you to kind of dive into just a little bit, because I thought that was really exciting. The fact that you guys are using stock is something that you envision is going to give you guys more power towards the gig companies eventually, right?
Yeah.
So talk a little bit about that and how you feel that that's going to increase the driver's voice, if you will, against the companies.
Yeah, I mean, I read this book last year that sort of got me excited about this concept called the rise of the working class shareholder, and the basic premise, not just in the gig economy but broadly, was like, what would change in the labor market if working class people started to own stock in the companies they worked for? And would that be like an interesting mechanism to give them a way to organize, to not necessarily have to bring in private sector unions into an industry where, it's a newer industry like the gig economy. I mean, in fact, in the gig economy, you can't unionize because you're 1099 contractors. So what is the alternative to having some mechanism to organize like advocacy and a channel to say, hey, we represent the voice of the gig worker, and we understand their concerns, and we want to bring those concerns to companies like Uber and Lyft and DoorDash. So, that's the really broad premise. I mean, I think twofold: the like instant reward of saying, hey, we think that the work you're doing is valuable, so here's a token of recognition, $10 at Lyft stock, I think goes a long way for people that feel like they often just sort of go unseen.
Sure.
But then the longer term idea is that if we accumulate enough gig workers who own small amounts of stock individually, but collectively start to represent like a meaningful shareholder base, that's a mechanism that we can use to then propose things to these companies. I mean, every public company by law has to allow shareholders to submit proposals and show up to annual general meetings and vote on issues.
Yep.
So it's always weighted based on your percentage of shares, but it's often not the fact that you need 50% of the shares to actually influence a vote. You just need a loud enough voice and a compelling enough story and enough shares to be allowed in the room, right? So, we did this at the beginning of the year. I mean, I don't know if you guys ever watched Mr. Deeds, the stupid Adam Sandler movie.
Yeah.
Yeah. You might remember at the end of Mr. Deeds, he shows up to the shareholder meeting with like 1 share in his pocket, and he gets all the shareholders to like vote with him. Silly example, but there are really good examples in the real world where really small amounts of shares have been able to like influence the direction of the company. If you can highlight that these companies are making decisions that are not in their own long-term interests. And the way that we sort of frame all of these arguments is to say, if you don't ensure that gig workers are well taken care of, that they're valued, they're always going to be turning over. They're going to be churning from one app to another, or they're going to leave the gig economy altogether to go do some other type of work. And if you're Uber or DoorDash, I mean, it's a very expensive thing to constantly have to replace your workforce, right? They're out running bonuses and marketing campaigns. And so, our really simple pitch is, if you give a little bit more time to understand the issues of gig workers, you might have gig workers stick around for longer, and that's worth something to you as a business. So, in January, we submitted a shareholder proposal to Uber. It was the first one that we had accumulated enough stock in. You have to own a minimum of $25,000 of stock in a company to be allowed through this proposal process. Now we've crossed that threshold with all of the companies that we sort of support. So that means that we can sort of submit. It's like a 500-word document. We have a lawyer help us draft it. It gets submitted into Uber's legal team, and then it forces them to engage in a conversation with us. By law, they're required to look at every shareholder proposal, and we're allowed to push these things all the way to their annual general meetings if we want to. I mean, what tends to happen is that, and this is what happened with Uber, is that because they don't want these things distracting the narrative of their AGMs, they end up sort of negotiating with you and saying, hey, what do you really want? And like, is there something we can do to compromise to get you to withdraw this proposal?
Yep.
So, we're playing this fine line because we're trying to maintain good relations with companies like DoorDash and Lyft and Uber. But we also want to be like the mosquito in their ear that they can't ignore, So we'll probably do this again next year. This was sort of a first trial run with Uber. And in theory, we could do this to all 6 companies that we have stock for next year if we wanted to.
So when you say you own, you have to have more than $25,000 worth of stock, right?
Yeah.
So I obviously I understand that you guys purchase stock to divide to your members, but let's talk a little bit about that ownership. So do you guys still keep the rights to vote for the stock, even though that stock has been assigned to a user, or how does that work?
Yeah, no, it's a legally complicated process. So no, we don't. Like what we have is we sort of have 2 buckets of stock. We have stock that we own as a company.
Yep.
To ensure that we're always over that minimum threshold. And then we have stock that we give to workers. So we're not actually asking workers to like assign their voting rights to us. There's a mechanism theoretically to do it. It's just a complicated mechanism.
Yep.
And so what we're doing though is we're going to Uber and we're saying, hey, we own enough stock as a business. And it just so happens that we also have a bunch of customers who own stock. We're not legally representing them officially, but we've surveyed them, we've told them about the issue. We went to them to say, hey, is this an issue you care about? And so it's like unofficially saying this is sort of the weight of our user base without using those stock directly.
Yeah, we have all these users that are ready to fight. So do what we want.
Well, one thing that we do envision doing probably next year, because a lot of these AGMs have passed earlier this year, but to show up at an annual general meeting of shareholders is not a very complicated thing. It's generally like an online, webinar type thing, like a Zoom or something along those lines. And like earlier this year, Uber's AGM had less than 400 total participants. And so, they tend to represent big hedge funds and big investors and things like that. But like, if you could actually get 100 gig workers to show up on that Zoom call, they're allowed to sort of like go off mute and say, we're here. That just signals to people like, well, something's changing here. Like we've never had gig workers join these calls before. And so that's what we're trying to do ultimately is like give people a sense that like a small amount of shares could have a disproportionate impact on how these companies evolve over time.
Can you imagine the butt puckering that would go on at an AGM for Uber if 100 gig workers got on there? Like, what's up?
And like what's funny about it is that like Uber and every public company is so concerned about sort of the publicity around their annual filings and their earnings calls and all this stuff. So, they'd have to be very diplomatic. They'd have to be very open to listening to remarks. If not, the press would be all over them, right?
Oh,
I think there's some interesting tactics that we'll play around with over the coming years.
That's awesome.
It'll be fun to see how that power plays out, isn't it?
Yeah, totally. I mean, and so to close the loop on your question, Jesper, like if you own, if we give you $5 of stock, you don't actually own a full stock. You own like a fraction of a stock.
Yep.
The moment you own more than one full stock, then you'll start receiving direct mailings from Uber as a shareholder. So Uber will send you their annual report. They'll send you sort of their, like if you're a shareholder in a business, you'll get these like packages in the mail of all their financial documents, et cetera. But you need to have more than one share to be allowed access to those rights. But so that's not much. I mean, for, we might be, I haven't looked at the share price in a while, but maybe like $35, $40 of stock is not like a crazy amount to accumulate to say, hey, now you're in that category. You own more than one share. So
that's the main reason for the brokerage account, because the information needs to be shared with them.
Yeah. And I mean, there's no other use case for the brokerage account. Like we're not doing anything like Robinhood where we let you like buy and trade stock or anything like that. Like it's legally, we need to have a brokerage account to fund the stock. But practically it feels like a reward program. You're not like, day trading on a bunch of stocks. So, so that's the pretty simple use case.
Yeah. It's like when, Jesper and I both have a stash account,
Yeah.
And it's like, we've never gotten a full Tesla stock, but there are some stocks that I do have full stocks that I do get all that information via email. Like, here's your dividends. Here's when the meeting is. I'm like, I've never gone to any of these.
Stash is a great example. We looked at Stash pretty closely. I mean, Stash approaches this slightly differently. They sort of think of it more from like the consumer perspective to say, hey, if you shop regularly at a brand,
yeah, that's what I
you
do.
might care about that company, so you earn stock in that company, right? Like, we're sort of applying that same concept, but to where you work instead of where you shop.
Yep.
Super cool. I love it. So let's talk a little bit about, again, for new users or listeners, the cash advance, which is kind of a game changer for people, especially with a lot of the workers work paycheck to paycheck. And, let's be honest, those alternator repairs or those set of tires is expensive, and sometimes you just don't have it.
Yeah, totally. And that's where we started, that we realized pretty early on that was probably the most obvious pain point. It was just like access to, call it like emergency cash if your car broke down or you needed, something outside of your balance in your account that you couldn't afford. And so the way it works today is if you're banking with us, we'll look at sort of the history of your account and your earnings. So we're looking at both like the data from your Uber and Lyft and DoorDash and whatever profiles you connect to your account to see like how much do you typically earn in a given week. That's sort of one data point that we look at to say, hey, like what's the consistency of this person's earnings? Generally, we're tiering people into buckets where they're earning up to $100 a week, up to $250 a week, up to $500 a week, or over $1,000, or up to $1,000 a week and over $1,000 a week. So, and depending on like what bucket you fall into, you sort of end up eligible for a different amount of advance. Yeah. So you're at this point, you have an account with us. We've issued you a debit card. You're depositing dollars with us. So this is a feature of the account. It's not sort of a separate standalone product. So you do need to be banking with us to get access to it. But then effectively what you have in your profile is you always have this like pre-approved advanced dollar amount that's just one click away from being added to your card if you need it. So, a typical profile might say, hey, there's a $500 advance that's been pre-approved or a $1,000 advance that's been pre-approved. We go up to $1,000. And in the day you need it, if you click, hey, I need that advance, we'll just instantly add it to your card balance, and you can spend it sort of like that same minute. So, and then what we'll do is we'll then pull back payments. We've got a couple of mechanisms for you to repay. So one, we'll offer you the ability to just like turn it into a 10-week repayment schedule. So once a week for 10 weeks, we'll take back 1/10 of the amount. Or you can pay any amount you want, lump sum. You can say, hey, I want to pay 50% of it right now and 50% of it next week or whatever, if you want to just clear the balance. And then we're actually just rolling out later, probably at the beginning of July, this idea where you can set rules that say, like, every time a deposit comes into my account, let's apply 10% of that deposit against my advance balance. So you can sort of make it a little bit more automated. And then once you've paid it off, then you're eligible for another advance again. So that, it's just sort of like constantly, almost like a line of credit, like it feels like you've got this number that's been approved. And if you use it, you have to pay it back. And then once you paid it back, you can use it again.
But you have to pay all of it back before you can get more assigned.
Yeah.
It's not like a rolling.
No, it's
yeah.
Not a revolving line of credit. No, that's a good question.
Yeah, it is, because like, if you take out $1,000 and you repay 500, you're not able to top back up to 1,000. You have to complete the repayment completely before you're eligible to take it out again.
That's good though. I like that. That secures you guys.
Yeah, and like that's the big trade-off with these things. Like, we're not looking at your credit score. We're not reporting into the credit bureau if you don't repay. So we're taking a pretty significant risk in advancing you the money. And in some cases, people will take the advance and then they'll switch their direct deposits out and they'll go bank somewhere else, right? And we won't pursue you. We might send you the occasional push notification, but if you delete the app, you'll stop hearing from us, right? So, and I shouldn't advertise that because that's not the behavior we want to get out of it.
Matt, what are you doing?
But I think the idea is that like we want to be seen as like giving you the benefit of the doubt and sort of treating you not like a bad credit customer, but as somebody that like we want to build a longer term relationship with. So, it starts by giving like, and we've had issues like our first version of this product, we were losing over 50% of the dollars that went out the door were not coming back. And then we've had to figure out, okay, how do we incentivize people to be better long-term actors with us?
Right.
And one of the things that we learned pretty recently is that the first advanced tier you can become eligible for is $100. But to get to $100, you need to have up to 4 weeks of deposits coming in. So it feels like a pretty high bar to get that first $100. So we're probably going to be introducing pretty soon a lower tier that's like, hey, you can get access to $20, almost like as like spot me $20 really quickly. And then if you sort of show a propensity to repay, then we'll make the $100 available to you. Then we'll make the $250 available to you. And if you're not good at repaying one advance, then we'll probably reduce your approved amount on your next advance until you get back into like a good habit. So you're sort of building a little bit of like an internal credit score with
Yeah.
it.
And I think 4 weeks is super fair. I thought you were giving access that like within a week of earnings. You're like, yeah, here you go. I mean, at 4 weeks, once you have 4 weeks of it, that person's kind of committed to the app and the card, and they're probably more likely to pay it back.
Yeah, one of the challenges is that like the trade-off there is that if somebody's like really in a tough spot right now, they can't get to an advance right now. If somebody really needs $100 now, and but you have to start banking with us, you have to move your direct deposit. So it takes a little bit of time to build up that profile. But it's a balancing act, because if we make it too easy, then the performance of the product sort of goes down, where less people repay, et cetera.
Well, it becomes much more open for scammers, right? People are just going to start opening, ghost accounts and take the money and leave.
Yeah, exactly.
I mean, we got people stealing DoorDash meals. I mean, for a $20 DoorDash meal, you're like, you're a piece of crap. And, it's crazy that you have to worry about that kind of stuff.
Yeah.
That's the other side of the gig economy, right? It's the people who have no intention, the workers, I should say, the workers who have no intention of treating this as a real job. They're just there to figure out how to scam the next $10.
Yeah. And so, I think over time, the goal is to like filter for people that actually have sort of a long-term view on their career in the gig economy and are, good financial actors. They don't, they might end up in a pinch every now and then, but in general, they have intent to be sort of like repaying their debts and on top of their finances. And we're just trying to provide tools to make that a little bit easier.
So one of the questions that have come up in our first interview, Chad, is the moving of the money around. Everyone likes to move money around real quick like that. And I did have someone reach out on Twitter, not reach out. I read it on Twitter, but he's a follower of the show and said, hey, I just downloaded my Moves, or I got my Moves card and setting it up, but is there a way to transfer to an external bank account? What is the process of that? What do you guys have for offering that option for you?
Yeah, I mean, there's probably a couple of steps. So short answer is we have not built the capability to do that smoothly, I would say. But there's a couple of ways that you can do it. I mean, ultimately you have an account number, a routing number, things like that associated to your account. You can go, let's say, from your Bank of America account. If you wanted to process a withdrawal from your Moves account, you can do that with your banking information, right? So as long as you're sort of the named person on both accounts, it's not like it's a little clunky, but it's not impossible to do. The other thing that we find quite common is that people will use Cash App or Venmo and they'll link it to their Moves account. And that'll be sort of the mechanism that they transfer money out. I mean, I think eventually we're going to build that capability. This is ACH transfers. So it's on our roadmap. I mean, I think what we realize is that we're not the like exclusive bank account that people use. If they pay their bills somewhere else or they pay their rent in another account, they need to be able to move money back and forth. So that feature's coming. Frankly, we're a relatively small team. And so often it's just a trade-off of like, how many software developers do we have? And, where is their priority going? But I do think like we're going to go down a path where a lot of the like basic expectations that people have of their typical day-to-day bank account, we will support. So, the ability to transfer money out, the ability to transfer money in, the ability to pay your bills. We rolled out the 2-day early pay on your account so that, if you don't have to wait for your Friday paycheck, you can get it on Wednesday or whatever. So like if you see something that exists in a standard banking product, there's a good chance we're going to get to it. But, banks have hundreds and if not thousands of employees building these products. We've got 10 to 20. So, total team size is about 30. So it just takes us time to get to some of these features, frankly.
Well, and right now you said that people can use the ATM network, right?
So. Yeah, we rolled out an ATM network that's pretty commonly sort of, you'll find them in like CVS's and Walmart's. They're called all-point ATMs.
The all-point,
They're common, like Chime supports the same one, and a lot of these other sort of like newer banking products support it. So it's like 60,000 ATMs across the country where if you go to withdraw at one of these ATMs, it's free. And some of them support the ability to deposit cash, not all of them. But if if you see one of the bigger ones inside of a CVS, typically they'll have the ability to deposit cash. So you can find one of these all-point ATMs across the country.
It's actually the same one Uber supports.
yeah, exactly. It's the common one for like these sort of like neo-banking products.
Yep.
So when you are, Jesper bring up a good point about the Uber card. How do you, when you're talking to people, how do you convince people that, I mean, obviously the stock thing is pretty badass, but because Uber has a card, DoorDash has a card, they all have these cards.
Yeah.
Now, mind you, the DoorDash one goes down, I swear, every other day. I see people tweeting about it. So it's ridiculous.
Yeah.
Anyways, I would never use the DoorDash direct card. But what is the advantage for you guys? Like, how do you say you should use our card because it's better?
Yeah, I mean, there's some obvious starting points, providing you an advance, providing you stock rewards. These are things that we intentionally try to be different than Uber and Lyft and others. There are some things that Uber and DoorDash and Lyft can do that we are not yet in a position to do. They have like a huge economy of scale, so they can roll out pretty generous reward programs and perks and things like that. That I think ultimately we aspire to get to that same scale and be able to like at least match them on some of these things. But I think one of the things that we often hear is the frustration of having to like jump around between a lot of accounts if you work for more than one app, right? So if you're trying to like take advantage of all these perks, your banking sort of like experience is pretty fragmented. You've got like a bank account over here that you're using for your gas. You got another bank account over here that you're getting the majority of your earnings on. Like you're always having it. So, ultimately we want gig workers to feel like they have an account that they can sort of rely on over the long term. And they're not just jumping in and out of accounts for like a short-term perk. And I think this is particularly true, like for, banking products. I'd say there's sort of two ways to think about them. And you look at products like Uber without being too critical. I feel like they lean in really heavily to almost like the like short-term instant gratification of a perk. And so people will flood to that account because they want to get that 2% back on their gas or whatever. But what's happening sort of over the long term is you're not, as an individual, building like a long-term track record with a single banking institution. You're spreading your money out in a lot of places. No one bank is getting to know you. Nobody actually has a full picture of your earnings. And so, and then eventually you'll hear gig workers sort of complaining that they never get access to products like loans and mortgages and things like that. It's like you've never actually committed to a financial institution long enough to give them a sense of like your full financial picture over a period of time, right? So we're trying to like move people towards a little bit more long-term thinking about their finances to say, hey, eventually it'd be great if you could get access to the same type of credit products and mortgage products and others that your standard, W-2 worker would get access to at a similar income level. But if you're banking in 4 or 5 different accounts, it's tough to give somebody a full picture of your finances. And so, that I'd say there's like an efficiency to just say, all my money's in one place. But we're still missing some features to make that like completely compelling. Like we don't make it easy for you to pay your bills right now. And that's something that we'll probably roll out relatively soon. So if you have your bill payments sort of automatically set up in, Bank of America, you're more likely to transfer money out of Moves to Bank of America because that's where your bills are getting paid out of. Eventually, we'd like to be able to like match that feature set effectively.
No, that's a really good point when you brought up like having one snapshot of all your earnings. Is they're all going in one card instead of you got a card here and a card there, and then you're trying to that's a really good point.
Well, and like we hear like really simple examples, and this is not so much on like dollars in the bank, but also how do you give somebody a picture of how much you earn when you've got you're taking screenshots of 3-4 different apps, giving them to the guy that you're trying to lease an apartment from. Be like, hey, trust me, I make $45,000 a year. Here's a screenshot of my DoorDash and my Uber. And, it doesn't instill a ton of confidence for the landlord who's like deciding whether or not he wants to give you an apartment. Right. So, all these things I think over time sort of accumulate and just like, it's less optimal than it should be for gig workers to just like interact with the financial system. And we're trying to reduce some of those barriers.
So how do you see your, product helping with stuff like that, with getting getting an apartment or getting a car loan and that? How do you see the Moves Financial helping with that problem?
Well, like a real simple starting point is that we have, I guess, like a single snapshot of your total earnings across all the apps that you use. And so, we can give that to you in a nice, clean, formatted, official looking statement that says, hey, this is my Moves earnings statement. It looks a little bit more official than like a bunch of screenshots from different apps. And like that often for some of these things is all you need. It's just like something that looks, that sort of convinces a landlord to take a chance on you. I'd say the other like longer term problems around like financing and access to credit, like these are things that we're going to tackle one by one. How do Uber drivers finance their cars and what are they paying on that financing? Or where do you turn around and buy insurance for your car, or how do you purchase health benefits? Like, I think these are all things that we can ultimately bring in to the product. I mean, you guys, I'm sure, follow this probably closer than I do, but if the gig economy sort of evolves towards this concept that they've been proposing in California with this like portable benefits, and Massachusetts is having this discussion now, there's a world where Uber and Lyft and DoorDash are sort of contributing extra dollars back to you on top of your earnings,
Right.
so that you can then pool those dollars and buy your own health insurance policy. But if you have those dollars coming from 3-4 different places, like, we talk to Uber pretty regularly and they're like, oh, we already support this in California. And I was like, you guys are missing the point. You give me dollars if I drive for Uber, and you only allow me to spend those dollars at like your designated partner health insurer. But what if I'm also getting dollars from Lyft and from DoorDash, and I can't put those dollars together to get the policy that I actually need? Because Uber only ever looks at you through the lens of like the hours you spend on their app, and Lyft only looks at you through that lens as well. And so nobody's looking at you to say, well, actually, Uber might think you're a part-time worker, but you're actually a full-time worker. You're just spreading your time on 4 different apps, right? So, and I think there's a lot of financial use cases sort of at that intersection that we ultimately think we could play a role in. And like the good thing is that we've got some good relationships with these companies. Like they haven't quite gotten there yet. Like it's a little bit tough because on the debit card side, we sort of compete with them. Like we're convincing people who have an Uber debit card to like leave the Uber debit card to come to us. But things like the stock rewards, they're really interested in like what that might mean for them. Like they are not really in a position to do that themselves. It's a complicated thing. If it's your own stock as a business and you're trying to issue it to your workers, and you're also trying to claim that these workers are not your employees, they're
right. That doesn't work.
So we've started a conversation with, all 6 of these companies saying, hey, we might actually be able to play that role as an arm's length party. Like we can give you stock, and that might be in Uber's best interest, because if we're giving a bunch of stock to Uber drivers, maybe those Uber drivers will stick around a little longer than they otherwise would have. We still have to prove that thesis out, but that's sort of the
well. And what if Uber didn't have an Uber card, but what if Uber said our card is the Move's financial card?
Yeah, I do hope that we eventually get there. It used to be, and Uber used to have this big department called Uber Money for years, right? They were investing in this idea that Uber was going to build its own sort of bank for its workers. Yep. They ended up canceling Uber Money right when we were getting started about 2.5 years ago. And the primary reason was this like AB5 debate around like, hey, if you offer all these financial services to your workers, it's hard to argue that you're not treating them as employees. Right. And so they realized at that point, like this cannot be a core pillar of our strategy as Uber. Where they do roll out these cards is sort of as like this tangential thing that says, well, we want to make sure that a new Uber driver, let's say you're an immigrant and you don't have an account, but you want to drive for Uber, they want to make sure that's not an obstacle to get you started, right? Or, they want to be able to drive some loyalty to people that drive more or less for Uber. If you're a platinum driver, you might get some perks that you wouldn't otherwise get if you're not. And so they're using it more as like a loyalty and retention strategy. We do think if we can show them that we have the scale to support that user base, eventually it'll highlight that like they don't need their own cards in market, and they can run programs through us. Like what we're pitching to these companies right now is you can run like branded promos inside the Moves app that says, hey, Uber is funding a promo. It says if you drive more than 10 rides in the next 7 days, or whatever, 50 rides in the next 7 days, we're going to give you access to $50 of Uber stock, partnered with Uber, but Moves is the one that's going to give it to you. Right. And then we can run these sort of like in-app programs that ultimately they can get the same benefits to their workers, but they don't have to like manage their own card programs. And most of them, like they're working with third-party companies, right? They're not building these things internally. No. DoorDash Direct is a good example. They're working with a company called Payfare. And as you've highlighted, none of these products are perfect. And one of the things that I find hilarious about some of these products, without picking too much on one in particular, if you're Payfare or let's say you're an Uber and Lyft driver, and this is more true in Canada because they are the back end of the Uber card and the Lyft card. But in the US, I think they support the Lyft card and the DoorDash card. And you drive for both of those, and you get 2 debit cards in the mail, and both of those debit cards are being issued to you by the same financial institution, but there's 2 different accounts, 2 different routing numbers. You're not allowed to put the dollars together. You have to download 2 apps. One is your DoorDash Direct card.
That's a nightmare.
So it's just like, they're really optimizing for like what is Lyft trying to get out of the equation, not what is the Lyft driver trying to get out of the equation. So I think the more we chip away at this, the more we'll have a compelling reason for them to want to work with us.
So as wrapping up here, what's one thing you're excited about in the next 6 months for Moose Financial, if you can tell us that you guys are working on?
Yeah, a lot of our focus right now is sort of breaking down some areas in the app that are a little bit clunky in terms of like friction that still exists when you're onboarding or downloading the app. So A good example of that would be because we're opening a bank account and a brokerage account for you. We work with 2 different partners. One is sort of a licensed bank and one is a licensed broker dealer. And when we open those accounts, you have to go through like a know your client sort of like verification process. Mm-hmm. And we make you go through that process twice because, and it's a really silly redundancy because our brokerage partner requires us to do it one way and our banking partner requires us to do it another way. And so now we're working on like, hey, how do we like drop those 2 steps and merge them into one so that it's just like a simpler onboarding experience? The other big thing that we're working on is like the automated transfer of your instant payouts. So, if you were in your Uber profile and you wanted to like designate your Moves card as like where you would get your same day payouts, we're trying to make that automatic from the Moves app. So you can just sort of click a button and we would do that for you. And then we're doing some work to refactor the cash advance product. The one, bring in a lower tier to make it easier for you to get to like a small number quickly. And then 2, we're going to be playing around with sort of like how the rules work around approvals and like different tools to repay. And there'll always be other features that just come out on the banking side that just make the account a little bit more complete.
Awesome.
That's awesome. Yeah.
All right. So, well, Matt, thank you so much. We appreciate you supporting the show and love talking to you. And
love what you guys do. Thanks so much.
Appreciate it. All right.